right. Happy Friday, Melonheads. Welcome to my favorite time of the week, my Friday afternoon live stream. I hope you guys are well today as we head into the weekend. Big story this morning was jobs, right? What was that famous quote? One word for you, jobs, jobs, jobs. I don't remember what exactly that quote was or even which politician it was that said it. But it was all about the jobs report today. And everybody is saying, oh my goodness, this was the Goldilocks jobs report. It was just right. I don't think so. I don't think so. And I think Zero Hedge has this one right. And I'm a big fan of Zero Hedge. Maybe I rely on them too much. You guys tell me. But I think they hit the nail right on the head. It's something my man Mish has been talking about for a while now. The difference between the payrolls and the households jobs report. This is not strengthening the economy. This is not inflation going quietly into the night. I do think inflation is going away. Certainly asset inflation is going away. Remember, it hits assets first, then it hits consumer prices, and then it hits wages. Well, what we saw today, 223,000 jobs added. At least that was the headline number. That's a lot of jobs, right? More tightness in the labor market. And yet, wage growth was only 0.4%, I think. And it was only about 4.5% year over year. Wage growth well below the rate of inflation. Now, remember, folks, I had the Happy Hawaiian on my channel last week or over Christmas, and I released the interview I did. It was a fantastic interview with the Happy Hawaiian. He is a really sharp guy. We released it in 3 parts about how all the data points are just wrong, that the Fed is using incorrect data and drawing assumptions based on flawed data, whether because of incompetence or malfeasance is irrelevant. The data is wrong, and they're making conclusions based on it. And one of those things we talked about was jobs. And we talked about this Philly Fed report that came out a few weeks ago that said the Bureau of Labor Statistics had overstated jobs in the second quarter only of 2022 by more than 1.1 million. So the Philly Fed basically said the BLS jobs reports are wrong. They're wrong in a big way, like wrong by a factor of 100. So I don't get the optimism. I don't get all of this energy around this jobs report today. And you're going to see everything was up today, except Bitcoin, of course. But everything was up today. Stocks were up. Bonds were up. Yields were down. Commodities up. Everything going up. Everything going higher. And, this is just wrong. This is wrong. We are not in for a soft landing. If you ask me, what we saw today is further indication that this recession that is coming is going to be bigger and more severe than we realize. There's a lot of early indicators coming out. We're already starting to see the stories about layoffs. We're starting to see value go up in smoke. That is very deflationary. And remember, the Fed has been promising us a soft landing where they can give us a defeat in inflation, right? We can get rid of the inflation, return to their 2% target. Why is it 2%? I don't know. It should be 0%. Without causing massive unemployment. And I just don't think that's going to happen. Anyway, let's bring in my man Mish and let's look at some of the articles. By the way, we have another big story we're going to talk about today is Binance. We're going to get to that one later in the show. A lot going on over there. But Mish, how is it going today?
I'm doing really good, man. It's a little chilly here. I heard you talking about the inflation. You know they need inflation for debt.
Yep, that's the problem with a fiat standard that's relying on debt. You need increasing levels of debt to keep the system afloat. It's the laws of large numbers. The numbers just get bigger and bigger and bigger until something breaks. Something broken already? I think so. I think the Fed has already broken it, and it just hasn't shown up. By the way, on the subject of inflation and deflation, Joe Brown over at Heresy Financial, I talk about him a lot on this channel also, one of the best out there. He did an absolutely fantastic video about deflation. I believe the thumbnail said something about positive real yields. It was just a day or two ago. That was a really good video. I highly recommend you check that one out. And also subscribe to Joe's channel if you don't already. But before we get into the jobs report, we have got to look at what's going on in stocks today. Up and to the right. Look at this. The S&P 500 up 92 points or 2.42%. Initially had a little bit of a sell-off this morning. There was a red for a little while, but then up and up it went. still heading higher. We're down a couple of points the last few minutes. We'll see what it does in this last half hour of trading or so. The Dow up 735 points today, or 2.23%. We almost had that spontaneous live stream for a 1,000-point up day. That came out of nowhere. And the NASDAQ leading the way higher, up 280 points, or 2.72%. My QQQ puts not looking so good today. This is why I took some profits last week. Was it 2 weeks ago? It was a while ago. I took some profits a while ago. Thank God I did, because the remaining position not doing so good today. It was still in the black the last time I checked, but probably not by much. Not with the NASDAQ up almost 2.7% today. Before we get into the DXY, there's a couple of other things I want to talk about. Check out commodities. We have got a lot of green in commodities. We have got gold is higher, 1.79%, up $32 at 1873. Gold is knocking on 1900. Silver back over 24, up 58%, 2.5%. Metals really going
doing
higher.
Great, man. Even platinum,
by the
is
way,
having an okay day.
Platinum back over 1100. We haven't seen platinum over 1100 since those riots in South Africa back in 2021 over in the summer. I don't know if you remember that. Keep your eye on platinum, folks. The inventory levels at the COMEX of platinum are dangerously low. There's still a lot of open interest on an active month. There's rumors about these contracts being settled privately off the exchange in order to prevent shorts from being forced to go out and buy the metal some other way. And another situation developing is intermittent power outages, rolling blackouts in South Africa. You have to pay attention to South Africa if you're going to invest in platinum, because something like 80% of the platinum that's mined in the world comes out of South Africa. And if the power keeps going out in South Africa, that is going to affect the supply of platinum one way or another. Even if the miners have generators, they still have to send them to smelters. They still have to get it through ports and down highways. They still have to move things. So power outages will affect platinum production. So,
I think the smelter, the smelter is a very important concept there, because all we heard last year is all these smelters going out. Well, we'll start seeing that here this year when the production's not there that it was last year.
And I'm not sure exactly where the smelters lie. I think South Africa probably exports a lot of the raw ore. I don't think they refine it in-house there. But suffice it to say, the whole platinum supply chain will be affected by rolling blackouts. Now, the one thing that didn't change today was WTI crude, still sitting down around 73.67. The energy trade, really, that all has to do with what's going on in Europe. And what's going on in Europe right now? Nothing. There's no problems because it hasn't gotten cold in Europe yet. They have had an unseasonably warm winter thus far. It's still only the first week in January, folks. And, well, congratulations, Europe. You rolled the dice that Mother Nature wouldn't kill you this winter, and so far you've been right. Good luck on the next roll. We'll see what happens when that cold inevitably hits. The U.S. sure got it. Now, who would have guessed, if you would have asked back in August when European power prices were like 700 euros per megawatt hour or some ungodly number, who would have guessed we'd have rolling blackouts in the U.S. this winter and not in Europe?
Europe would be fine, but we're doing rollouts.
Yeah, rolling blackouts in the U.S. In Tennessee, all right, the Tennessee Valley Authority, it's like one of the most reliable power grids in the world is TVA, and they had rolling blackouts. That is the pathetic state that the American power grid has declined into. And it's getting worse, by the way, because we have nothing but unicorns and rainbows to try to improve the situation for the time being. All right, now, so, we also have to look at bonds. Look at bonds right now. Yields dropping today. That means bond prices heading higher. Now, the short end of the curve, the 1 month and the 3 month, those yields are up 13 basis points on the 1 month. All right. People hiding out on the long end of the curve. Now, you might be forgiven for mistaking that for a flight to safety, right? When you see bond yields cratering, it's typically viewed as a flight to safety. I mean, look at the 10-year yield down 16 basis points today. Look at the 3-year yield down 22 basis points today. Yeah, that's a flight to safety. And
look at the 1 month. It's up 13 basis points today.
Yeah. Well, that is the yield curve further inverting. Look at gold and silver prices higher. That's a flight to safety, right? So you would think this is a flight to safety going on right now, but then look at the NASDAQ. Nobody is fleeing to safety in the freaking NASDAQ. up 279 points or 2.71%. So what is going on today? It's a dollar trade. Look at the DXY on the one-day chart. This is why everything is up today. By the way, hi, Mom. Hi, Dad. I was going to say everything in their brother, everything in their mother. Reminded me, hey, Mom and Dad, how you guys doing? Love you guys.
Hi, Mom. Hi, Dad.
But the DXY, another technical breakdown today. Well, let's talk about the DXY. And this is what I think is going on right now. This is the weak dollar trade. And this does not inspire any confidence in the economy to me. But what we had here, this is looking at the DXY, the US dollar index, going all the way back to about August. All right. And this green line, this was about 105.0809. That was the low from August that I was watching a few weeks ago when we had a breakdown below that. I said that was a signal that Dixie was going to go a lot lower. We didn't get the bounce there that I was hoping for that would have sent the Dixie higher. Now, we came back this week, and we started to re-challenge that level. And you notice right here, we got like right up to that level. That's where we opened, where we closed yesterday, where we opened today. Nope, rejected. Heading sharply lower. We were above that level for a little while this morning in the early hours. We were at 105.26, something like that. Now all the way down to 103.9. Yikes. Oh, and by the way, you guys see this right here? Let's zoom in a little bit on that. What you're looking at there is the 50-day moving average dropping below the 200-day moving average. Shout out to my buddy Brian Zarb from thetechnicalchartist.com, who called this one out to me on Tuesday morning and said, hey, this is imminent, and it just happened this morning. And sure enough, the Dixie takes a big dive. So we've got a death cross in the DXY. We have got a failure to retake a key resistance level that was previously support. So this is a technical breakdown in the dollar strength. And therefore, everything that is denominated in dollars, almost everything, is heading higher. And that's why everything is rallying right now. This is the dollar trade right now. They're saying it's the jobs report and the Goldilocks zone and everything. It's weakness in the dollar is what I see happening right now. So, real quick, I want to get to a super chat that I just saw came in a minute ago. Where are you? There it is. There is only one way, says everything seems good in the UK so far. Well, one way, thank you very much, sir, for the support of the channel and for the super chat. And I am thankful that things are going well for you guys in the UK so far. Let's hope they stay that way. Let's hope Mother Nature stays cooperative. Mother Nature hasn't been very cooperative on this side of the Atlantic. It's been miserable cold here. Better us than you guys, I guess, because if that cold spell that hit the U.S. 2 weeks ago had hit Europe, there would have been mass mayhem in Europe. You cannot imagine. If Tennessee went down, I cannot imagine what would have happened in Europe if that cold spell had hit over there. And look, we're all on the clock here. We got to get our energy policy out of our proverbial rear ends because sooner or later it's going to happen. Mother Nature doesn't cooperate forever. And if your energy policy is hoping it doesn't get cold, good luck with that. Good luck with that. So there is only one way. Again, thank you very much for the super chat. Thank you for supporting the channel. And I hope it stays that way for you. I really do. All right. Let's move on. Financial Prepper was live too. That's right. He's over at CES with Ninja and with Dan. Shout out to Commercial Prepper. If he's lurking in there, I don't know if he's there, but they were live earlier. All right. Let's look at this jobs report and what really happened. First, let's go to this is what Bloomberg, this is what the mainstream financial press is saying. U.S. hiring was solid while wages cool, giving the Fed room to slow hikes. Now, this is just this headline is BS to me, giving the Fed room to slow hikes. The Fed can do whatever the Fed wants. They could have slowed hikes a long time ago, right? The Fed didn't have to keep printing money all through 2021. They didn't need room to stop printing money. They were way too late to act. They printed money for way too long, just like it's starting to appear that they hiked for way too long. Now, well, let's just get into this. Payrolls rose 223,000 in December, capping a near record year. Baloney. It was not a near record year. We're about to see some big revisions downward to these numbers. Unemployment rate dropped to 3.5%, matching a 5-decade low. The U.S. labor market stayed strong last month, and wage gains cooled, starving off the possibility of a near-term recession and giving the Federal Reserve room to slow interest rate hikes. Non-farm payrolls
Well,
increased 223,000 in December, capping a near record year for job growth. Go ahead, Mish.
no, I was going to say you talked about how the big revisions are coming. I think two points. I'm sure you're going to talk about household here in a
Yep.
second. But if everyone remembers, right, we had that million job discrepancy that the Philadelphia Fed put out about. So I want everyone to kind of think about that. The labor market numbers we've been seeing are about to all get revised this month into next month. So they could go back and say, no, we didn't have any jobs last year. And the year's over and there's nothing you can do about it because you got bad information.
And look, let's think about this realistically, right? Something here doesn't smell right. Something here is wrong. If the jobs market is really this tight, if we've really added these millions and millions of jobs, and if nobody can find work, then why haven't wages risen? Supply and demand, folks. If the demand for workers is high and the supply is low, we should see the price going up a whole heck of a lot faster than 0.3% average hourly gains that we're seeing in the month, or 4.6% for the year. Something's not right here. What is wrong? Either the wage numbers are wrong or the jobs numbers are wrong. One or the other. And this is why I mentioned the interview I did with the Happy Hawaiian 2 weeks ago. He's saying the jobs numbers are wrong. He's saying that they're overstating the number of people working. They're counting people twice. They're counting job openings twice. And that we really don't have that much tightness in the labor market. And that's why the wages aren't going up. And that's not a good thing because the Fed is still tightening as if we do have tightness in the labor market. The Fed is still trying to kill jobs. All right, everybody. And let's look at it this way. Average hourly earnings increased 4.6% year over year in December. Well, inflation is still over 7%. So everybody in the country got about 3% poorer, didn't they? If you go by what the cost of living did by their numbers, their inflation numbers, which are understated, we know the actual rate of inflation was closer to 15%. And yet wages only went up 4.5%, and they're still trying to slow wage growth. I mean, their solution to the inflation that they caused with their money printing is to make the average person poorer. And they don't mind doing it because they sold their stocks last August, remember, to eliminate the appearance of a conflict of interest. Yeah, they cashed out at the top, and now they need to make sure everybody else gets poorer. And, the Happy Hawaiians numbers were onto something. The Philly Fed's numbers are onto something. The jobs market is not nearly as tight as they're telling us, and they're still trying to make it worse. They're still trying to drive people further into the poorhouse. Just what in the hell are they doing? This recession is going to be ugly, folks. And how ugly? Let's look at what Zero Hedge came out with. This was a pretty good article. Shout out to Mish who found this one this morning. Inside the strong jobs report, full-time workers minus 1,000, part-time workers plus 679,000. Say what? And it comes down to the difference between the establishment survey, which just counts payrolls, the number of positions filled, versus the household survey, which counts how many jobs people are working. And it seems like a nuance, but it's important because the establishment survey, that's the strong jobs report. That's the headline 223,000 number that everybody's harping on right now. But the household survey says people are not getting full-time jobs. The number of full-time workers, i.e. the quality jobs, is in decline. These BS part-time jobs are on the rise that don't pay nearly as much. And the people who are getting these jobs are people who are already working. In other words, people are getting second jobs. And this is in the
So hold on,
data.
we need to
Go ahead,
talk
Mish.
about this data point here. This household survey data, the data is taken by going to households. The jobs report numbers are from BLS and their metrics and algorithms. So right now we have about a 2.7 million job difference between the two, which would equate to about a 1.3%. No, I did the math wrong.
It's about another
Almost
percent and a half.
2%. Yeah, about 1.5% of unemployment that is not being shown.
Which, by the way, with unemployment right now at 3.5%, if you consider that there's another 1.5%, possibly 2% of unemployment that's not being accurately counted, Well, then we're already above that 4.5% soft landing target that the Fed has set, and they're still tightening. We're already there. And remember the delayed reaction. We've talked about this in the past. What the Fed does, we don't see what the Fed does until several months later, the effects of it. You'll see stocks moving as people try to front run one way or another. But the actual effect on the job market, the actual effect on the economy, you don't see it until several months later. So we're going to blow way past that 4.5%, way past that 5% unemployment target. Soft landing is already out of the question. Like, again, I've used the acronym. Somebody jumped out of a 20-story building. They've fallen 19 floors, and they're saying, so far, so good. It only works until it doesn't.
Well, we're in the slowdown, the slowdown for housing right now. So we should be seeing a large uptick. I think so many people have bought or brought so many things to the left. This downtrend we'll see here this month, essentially with the job numbers from the housing people not working, is going to stick there because I don't think they're going to pick up again come April.
By the way, we talked about the missing ingredient. We've been saying it for a while now. The missing ingredient to a housing crash is layoffs. It's unemployment. What did we see yesterday? Amazon?
Yep, 18,000.
They increased their layoffs from, I think they were going to lay off 10,000, and now it's 18,000. Amazon's piling up the layoffs. What other layoff stories did we hear this week?
We've had Costco's going to do layoffs.
Bed Bath and Beyond is probably going to go bankrupt.
Bed Bath and Beyond, yeah. There's Bed Bath and Beyond has like 3 weeks of money left. It's not even. They're just done.
I mean, if Bed Bath and Beyond couldn't be profitable through the early 2020s, when we were giving people money and making it easier for them to buy houses, which are all things that should rocket Bed Bath and Beyond sales, then Bed Bath & Beyond has no chance in a downturn real estate market. Nobody's buying new bath mats, new kitchen appliances for their house that's underwater. All right, so let me get to Steve Woitis here real quick, and then we will get to the rest of that jobs report. Steve, thank you very much, sir, for the support of the channel. He says, Happy New Year. What's your opinion on oil and natural gas markets for 2023? It is 100% dependent on Mother Nature, Steve. That's what it comes down to. Now, we have got, with the energy market, I'll just call it energy with oil and gas, we have got massive demand destruction is happening right now. Massive demand destruction from two sources. The weather in Europe is destroying demand. Thank God for the Europeans, because if it had gotten cold, there would have already been a catastrophe, a humanitarian crisis in Europe. So we've got demand destruction from the weather, and we've got demand destruction from the economic downturn, this recession that we're already in, right? I did a video earlier this week about some terrible manufacturing PMI reports that came out. By the way, we got some bad services PMI reports today also. So the economy is contracting, and that means energy demand destruction. All right, so that's one side of the pricing equation. Demand is in decline. Now, the other side of the equation is supply, obviously, and supply is the big question mark. What's OPEC going to do the next time they meet? My guess is they cut, but I was surprised that OPEC didn't cut back in November. I think they probably regret that already because OPEC has said they want $90 oil. Now here we sit in the mid-70s. The other situation is, what is the actual effect of ending the SPR releases going to have on oil markets? I don't know. I don't know what that effect is going to have. It's a good bet it's going to wipe out all of the price declines that we saw over most of last year. So oil and gas is hard. My guess is energy prices are headed higher. All right. The question is the dumping of the SPR versus the demand destruction from unseasonable warm weather and the economic recession. Which of those forces will be more powerful? Right now, the demand destruction is winning and the price is heading lower. I don't think that holds forever. I think in a few months, we're going to be looking at substantially higher oil prices. Natural gas is a little bit harder to peg because natural gas is more dependent on the weather. But thank you, Steve, very much for the support of the channel. I really appreciate that, sir. And while we're here, we're going to see Crushing Bear. What's going on, Crushing Bear? He says, Hi, Jack. When are you closing your QQQ puts? Can you go over the SPY QQQ daily weekly chart? Falling wedge forming, thoughts on upcoming tech earnings. Let's work backwards. Tech earnings. Let me just tell you, based on what YouTube is doing right now, I think tech earnings are going to be lousy. And speaking of tech earnings, Facebook just announced that they were diluting their shares, or I'm sorry, Meta Meta, I always have my pinky up when I say Meta. Meta announced they're diluting shareholders in order to give bigger bonuses and shares to their employees. So I wouldn't touch that one with a 10-foot pole. I think big tech earnings are probably going to be pretty bad. Amazon is going to take like $1 billion hit because of the bloodbath that was the Rings of Power, which was some of the worst television I've ever seen. And Tolkien is spinning in his grave right now. We should wrap Tolkien's body in copper wire and then surround his coffin with magnets. So when what Amazon has done to his work makes him spin in his grave, it will generate electricity. That's my solution to the energy crisis. As far as the daily, weekly charts, I can tell you I still hold about 2/3 of my original position of my QQQ puts. I'm getting close to expiration on those. I was hoping to unload some of those. I haven't yet. I started selling them a little while back. I can't remember exactly the day I sold them. It was either last week or late the week before that. Sorry, the days are just blurring together right now, guys. But yeah, I'm going to have to exit those positions sooner or later, but I will be rolling them up and out when I do because I think the markets are still heading significantly lower. I think the bad economic data continues to pile up, and I don't see it. And I don't see this soft landing happening. I don't see why markets are heading higher right now other than this weakness in the U.S. dollar. And I don't think that holds. I think the weak economic data will win over that. Thank you very much, Crushing Bear. Appreciate the support of the channel, sir. And okay, with that one, let's get over to what is going on in here. So here are the facts. And this is about 3/4 of the way down the Zero Hedge article. It gets really good. It says, here are the facts. In December, the number of full-time workers was 132.299 million. That's down exactly 1,000 workers from a month before. At the same time, the number of part-time workers exploded by 679,000 from 26.115 million to 26.794 million. All right, so we actually saw a net loss of 1,000 full-time employees and a huge gain in part-time workers. Finally, adding insult to injury, the number of multiple job holders, or those workers who need to hold more than one job to make ends meet, yet who are double counted in the payroll establishment survey. That's important. Somebody with 2 jobs is counted twice in that headline number, the 223,000 new jobs. That person is only counted once in the household survey. That number surged by 370,000. The number of people working 2 jobs increased by 370,000, which means that the 223,000 payrolls number is really a negative when adjusted for how many people actually got new jobs. How many people actually got new jobs? The jobs market, it's not getting tighter, folks. It's getting worse. It's getting worse quickly. Inflation has bit harder than they admitted. People are working 2 jobs to compensate, and because of that, they're being counted twice in these job surveys, and the Fed is looking at these job surveys and saying it's okay to keep tightening to inflict more hardship on these people because, look, everybody's working. No, Jay Powell, this poor guy's working 2 jobs because of the inflation that you inflicted on him, and now you're trying to make him lose his 2 jobs to make him poorer so he doesn't spend as much money at the store. Stop doing this to people. Stop messing with the interest rates and the monetary policy. Let the market decide.
Well, that's a good point. All these part-time jobs, 250,000 of them are in private sector, which means mom and pop shops, right?
Yep.
Downturns, those are the first jobs that go away.
Yep. Yeah, and most of these gains were in the usual places. Service sector saw most of them, like leisure and hospitality. It's hotels and restaurants. That's where most of the gains were. Those are low-paying part-time jobs. And then we did see gains in healthcare, which with an aging population, that's not surprising. That's not a sign of economic strength. That's a sign of the demographics of the country. So this jobs number today, I don't see the strength. I don't see that as a justification for a move of 95 points in the S&P 500, almost 2.5%. 2.25% in the Dow, 2.75% in the NASDAQ. I just don't get it. Stocks, bonds, and commodities should not all be up at the same time. But the dollar's getting weaker. That's why everything's going up today. It's not optimism about the soft landing from the Fed. I don't think there's anybody out there who legitimately, realistically expects a soft landing from this situation. People may be going on TV and calling for a soft landing because of office politics or whatever they're trying to sell, the advertising the other side of whatever trade their firm is pumping. I mean, I don't know. Let me know in the comments. Do you really, if you honestly think there's a possibility of a soft landing, and you are free to disagree with me here, folks. This is not an echo chamber. All right. I'm not gonna mock you or anything. I'm just honestly, if you think there's a soft landing on the horizon, I'm very curious about why you think the landing will be soft. What is it about this landing that will make it less painful for the guy with two jobs who is now going to lose his two jobs? And the reason he got two jobs in the first place was because he couldn't afford anything. And remember, it's not like these prices are going to go back down, folks. They're not. All right? You might have disinflation. The prices may stop going up, or they might go up slower, but they're not going to stop going up. And if the prices do go down, remember, deflation works the same way inflation works. You first see the deflation in asset prices. So stocks will lose value. Homes will lose value. Then you see the deflation in consumer prices. And then finally, you see it in wages. So it's going to hit the assets first. It's going to hit the housing market first. It's going to hit the stock market first. Then we might actually see some deflation in the store. It might actually get
I'd like
cheaper
to say two quick things. One, I love my shirt and the purple that it is. But two, I think that they're giving me crap about my shirt. I think the point of this, what's that?
It's the color of victory.
Is
The Roman
purple the color
emperors
of
wore
victory?
purple because it was the color of victory. Yep.
Oh, I thought it was just a royal thing. I just like the purple. Hey, if it makes you feel any better, people around here don't like it either.
It became the color of royalty because the royalty was always victorious, right? The king never loses. Oh, no. So eventually the royalty.
And then I forgot what number 2 was. The concept of the. Yeah, I've said this before. There is a swath of humanity in the United States that believes that the pivot is coming right soon, like in the next couple weeks, or that we found and we're in the soft landing now. I mean, because things are starting to get better. Okay, yeah, things start to get better, and then you have to hold it there until you kill it. And that hold is what's going to get us once they get to the level they think they're going to get. Which cash carry said 100 basis points of more movement, not just the 75 that we thought before.
Jeez. Is that the same cash carry who said no rate hikes until the end of 2023 at the earliest? That yes. Cash carry?
That cash carry?
Yeah. If only his calls were as accurate as his eyeballs are intense. I have a recurring nightmare about accidentally making eye contact with cash carry. Have you ever? Do not look into that man's eyes. Do not look directly at cash carry. My God, they'll burn right through your soul. I mean, he's wrong about almost everything he's ever said. Although the one thing the man has said, and I'll give him credit for this, Cash Carey was giving a speech. It was to a small audience, a small room, and he mentioned CBDCs make no sense to him. That a CBDC, we already have all the good things about a CBDC. We already get that from freaking PayPal or Venmo. The only advantage to a CBDC is draconian control over the population from the government. And that it made perfect sense to him why China wanted a CBDC, but it made no sense to him why Americans would ever want a CBDC. So Cash Carey, he earned himself some points with me when he did that. I mean, he's burned plenty of points over the years. And, I'll never let that first rate hike by the end of 2023 go. But, he is the most powerful person in finance who I have ever seen come out strongly against CBDCs. So may he be the first of many, because all of his colleagues are heading the other way. So I'll give Cash Carey credit for that. All right. I think we beat to death this jobs report. Now, there's another story came out today, and I am going to throw a link in the chat, folks. Copy this link because this was, oh man, was this a good read. I'm throwing this up in there right now. Please don't leave the stream right away, but I always get nervous about putting links in the chat. I'm like, oh, great, all my viewers just left. Check this one out after the stream. This one came from Dirty Bubble Media, which is run by a guy named Mike Burger. Mike is really good at what he does. All right. This burger guy, he's killing it. All right. And Dirty Bubble Media, this is one of the Substacks who was all over the FTX story early on. All right, he drew attention to a lot of what was going on at FTX, and he set a lot of those dominoes in motion. All right, so same thing goes with Celsius. I mean, he's one guy. There's a couple of other guys like Bitfinex, like Crypto Hippo. All right, these really obscure names. Most of these guys are anonymous. They are doing fantastic work. They're doing better work to police the cryptocurrency universe than any SEC, CFTC lettered organization has ever done in the legacy finance world. These few guys and their Substacks and their Twitter are shining lights where they need to go, and they're causing these frauds to fail. They are doing a public service. So, Mike, Crypto Hippo, Bitfinex, all you guys, if you're listening, first of all, I'm flattered that you guys are listening to my channel. Second of all, keep up the good work. You guys are doing a public service. Absolutely outstanding work. And what he dug up in Binance today, all right, I'm going to limp through this one, all right? Binance has their own chain, and the language gets hard here because I think they do this on purpose. They obfuscate on purpose to make it easier to get away with what they're doing. They created their Binance coin, their BNB token, and then they also have their BUSD stable coin. And it's bad enough that they're doing what SBF did over at FTX, where they're just creating their own coins out of thin air, granting them to themselves, and then propping up the value of them. All right, that's bad enough. All right, that's what SBF did, and I've been saying for a while on this channel and in some of my videos, CZ, Changpeng Zhou, the CEO of Binance, he is no better than Sam Bankman-Fried. But it looks like he's worse, because what Dirty Bubble Media has found, or what he summarized, because I believe it was Crypto Hippo who found it, and there's a number of these other guys. Also, this guy Patrick Tan, who wrote for Medium, he put this up recently. I'll put his article up in the chat also. What they found is that Binance blockchain is not really a blockchain. And this is what's so scary. You see, the thing about a blockchain is once a transaction is made, the transaction is immediately recorded on the blockchain, and it's sent out. And everybody, all the miners, all the computers that run the network, they all record the transaction all at once. It's known as immutable. Once that is made, everybody can see it, and it's permanent. All right? It's immutable. All right? That's known as immutable. You can't go back and delete a Bitcoin transaction. It's one of the reasons you got to be careful with Bitcoin. If you mess up and send it to the wrong address, it's gone forever. You can't get it back. Unless you know the guy who has the address and you say, I messed up, can I have my money back? And the guy agrees to send it back to you. But there's no undo. There's no, sorry, my bad, do-over. It's immutable. It's permanent. Well, that is not the case with this Binance blockchain. And what happened was Crypto Hippo found a wallet controlled by Binance that had 22 million BNB tokens in it. All right. Now, 22 million BNB tokens, maybe Mish can do some quick math. At $259, BNB is trading at right now. Billions of dollars. Here's the rub. He went back and he tried to find where that money came from, and there was no record of it. This wallet address that had 22 million BNB tokens in it, it was a Binance wallet. It only had 2 deposit transactions in its history, and they were both for like a 1,000th of a token. So there was 22 million BNB in there, but no record of how it got there. It just magically
about 5
appeared.
billion.
It's about $5 billion. Holy crap. $5 billion shows up in a wallet, and there's no record of how it got there. Now remember, it's a blockchain, right? Every transaction since day one is recorded and permanent. So there is no $5 billion just shows up somehow. It's not supposed to work that way. So he went and he tried to figure it out. He tried to download the entire history of this Binance Smart Chain. He tried to download the entire history to try to find out where it was that this money came from. And he kept getting an error message when he tried to download the history. Every time he tries to download the complete history, he gets an error message. And it turns out that this blockchain breaks every night at midnight. Now, you guys might be saying, Jack's getting technical. You're losing me here. Think of a blockchain as a stone tablet. Once something is carved in stone, can't be changed, right? That's why we say carved in stone is the saying. Like, it's permanent. It's carved in stone. You can carve something else, but that original carving stays there. You can't erase it. Well, this Binance blockchain is not a stone tablet. It's a freaking whiteboard. And every night at midnight, CZ can go in there and he can erase its history and he can rewrite it however he wants. And 22 million BNB tokens worth, thank you, Mish, $5 billion magically appeared in one of Binance's wallets. Now, keep in mind, he didn't, that we know of, create them out of thin air. It doesn't matter. The problem is they're there, and there's no record of them going there. There's no record of them being minted and then sent there. They just appear there. And that means Binance Chain, Binance Smart Chain, it's not a blockchain. It's a glorified spreadsheet, and the Binance people are the only ones who can edit it, which means you have to trust that they won't take it. I mean, the whole draw of a blockchain is that it's immutable, public, transparent. Everyone can see what everyone is doing at the same time. That is why Bitcoin is so appealing to so many people. But he can just go in and change it. And these guys found it. Every night at midnight, the Binance chain blocks, it breaks. And they created a backdoor where they could just go in and rewrite the chain. And they go into it in better detail here, folks. I just read this thing this morning, so I'm really struggling to summarize this accurately. What do they call it? They called it a state correct. Oh, what the heck is it called? The purpose is to reset the node to a specific height and continue block from this height. All right, state recover. That's what they call it. If your blockchain has a state recover tool to rearrange hashes, it may not be a blockchain. Similarly, folks have been reporting problems with, okay, this goes on. I don't want to summarize the whole thing, but I put the link in here to this Dirty Bubble Substack. But what Changpeng Zhou has created is not a blockchain. If he can edit it every night at midnight and he can move money around and there's no record of the transaction, it just magically moves from place A to place B, it's not a blockchain. All right. Now, keep in mind, folks, BNB token is trading at $258 right now. And Changpeng Zhou, besides being able to create these, mint these out of thin air whenever he wants, because he controls the supply of them, he doesn't only control the supply of them, he controls the distribution of them, and it changes every night at midnight. He can go into your wallet and take it. He built the back end to be able to do that. All right. Now, I always say not your keys, not your coins. I'm not talking about coins left on the exchange. I'm saying you could take your BNB off of the Binance exchange and put it into your own cold storage wallet that only you have the keys to, and he can still take it because the chain breaks every night. He can go erase the record of you pulling your coins off the exchange and into your private storage, and he can erase that record and he can put the coins into his own wallet, and there will be no record of that ever happening. I can't tell you what to do with your money, folks. All right. Sorry, the lawyers ruin everything. All right. So I can't make recommendations. All I can tell you is not with my worst enemy's money would I go anywhere near anything Changpeng Zhou has control of. Anything. I think he is worse than Sam Bankman-Fried. Worse. And keep in mind, I think Changpeng Zhou is the one who set the whole FTX collapse in motion. Remember, he's the one who started tweeting about dumping the FTT. He was business partners with Sam Bankman-Fried. I think he was the source of the leak on the CoinDesk article. So this isn't going away. This is going to be a big story. Again, like you see me struggling to explain this here. I'm not a blockchain guy. I'm not a technical guy. I am a mechanical engineer. Spent 15 years working in nuclear power. I could explain reactor physics easier than I could explain how blockchains work. But hopefully you got at least part of the message through my absolutely butchered delivery of this story. This is so bad.
Hey,
This is not a blockchain. That's what I'm saying.
it is
It's
not
not
a
a blockchain.
blockchain.
It's
It's
as far from
immutable.
Bitcoin as you can get. What do you
Hey,
got, Mister?
we do have two. We do have two super chats. One going all the way back to Dan.
I got Mr. Dan Hedin right here. Thank you, Dan, for your support of the channel. He says the soft landing will be if you have silver, platinum, and gold. I would call that a nice cushion. I don't know if that's a soft landing. I think it's still going to be a pretty hard landing. But maybe it'll be a water landing. You hit water hard enough, it still hurts. But at least you've got a life preserver. I don't know. I'm working on my metaphors here. Are we being analogous enough? But I agree. Gold, silver, platinum are a defense against bail-ins. By the way, there were some videos of the FDIC planning bail-ins that were circulating. Mark Moss did a video about that this morning. They're basically talking about, yeah, we're going to bail in if the banks fail because the FDIC only has like $125 billion insuring like $9 trillion of assets. And they're actually on the mic saying, but we don't want to tell people this because if we tell people this, they'll panic and they'll draw their money out of the bank. So we don't want people to know this. Whoops, the meeting was recorded and somebody leaked it. Maybe we'll do a video about that later. Oh, yeah. That was frightening. But yes, I wholeheartedly believe in the ownership of precious metals. I like the saying, be your own bank. And, you know, I don't put all my eggs in any one basket unless I'm carrying them back from the coop. By the way, I got 15 eggs, 2 more days in a row. My ladies are in full production right now. Getting about $10 a day in eggs out of my chickens. Thank you, girl.
Well, since I handle the own security for my stuff that's at my house, 12 gauge looking at you in the face is a pretty, intimidating sight.
Let me say, folks, if you're into that, little midnight gardening, never a bad idea. And since we're talking about heavy metals, to Mish's point, I would say lead is very close to silver and gold on the periodic table for good reason. So consider a little lead also. But thank you, Dan, very much. Appreciate the super chat, sir, and the sentiment. Thank you for the support of the channel. Gordon Nash is here. Thank you, Gordon. He says, immutable is the word of the day. All right. That's the secret word. Remember Pee-wee's Playhouse? Every time someone says the secret word, everybody has to scream real loud. All right. Secret word is immutable today. Immutable. Cannot be changed. It's the whole point of Bitcoin. You cannot change the history of the blockchain. If you can change the history of the blockchain, the whole thing falls apart. The whole thing falls apart. And that's what these guys, Dirty Bubble, Crypto Hippo, I want to get all these guys. Dylan LeClaire was involved in this one. Where is it? Patrick Tran. You should be following all of these guys on Twitter. I'm telling you, these guys are awesome. Who else is on here? There was another one that started with Data Finovation is the other one. Man, these guys, they dig deep. And they're good writers.
If you want to follow just 2 people on Twitter for this, I would follow Dylan LeClaire and Bitfinex. The Russian Bitfinex guy.
Yes.
Yeah, okay. Yeah.
Yeah. Dylan LeClaire and Bitfinex. They're two of the best. I recommend Dirty Bubble's Substack also. He's really good. By the way, all of these guys that I mentioned, if you guys are watching, open invite, come on my channel and talk about this. You guys could probably explain this better than I can. And I know the way this is set up, CZ has set this up to make it hard to explain. I mean, some of the terms in here, I mean, he's made, they did a whole section about how this is deliberately, he's got Binance Chain, Binance Smart Chain, BNB token, BUSD on Ethereum, BUSD on Binance Chain, and Binance Smart Chain. Deliberately obfuscates and confuses the heck out of people so they can't see what he's doing. Or so they just give up and walk away when trying to understand it. But these guys don't give up and walk away. They get their hand on that thread and they just keep pulling. They keep pulling. This was a good read. This was a really good read. Highly recommend both of these. Again, can't tell you what to do with your money, folks. I can only tell you what I do with mine. Mine is going nowhere near anything Changpeng Zhou has touched. Not ever. He is a snake in the grass. And thank you very much, Gordon Nash. I appreciate the super chat, sir, and the support of the channel. As always, you are a gentleman and a scholar. And Cormac is here. First of all, Cormac, I meant to say something earlier. I have not forgot about your comment on my PMI videos. Stay tuned. We'll talk about PMI. Talk about PMI in Europe. Thank you very much, Cormac, for your support of the channel. He says, "Hi, Jack. Is all crypto a scam, including Bitcoin?" No. I've no position in any, by the way, just curious. No, I do not think all crypto is a scam. Absolutely not. Actually, I think there's a lot of rot in the space. I think because crypto is the Wild West, I hate that expression, but it is. It's the Wild West of finance and anything goes. While there is freedom in the West, there's also people who bring mayhem with them in the West, right? If you went West seeking freedom, the pioneers, a lot of people found it. A lot of people ended up dead along the way, right? So if you don't know what you're doing and you just start walking West, you're going to end up scalped, murdered, butchered, robbed, right? That happened as people headed west. It was actually a gruesome existence. So there is nowhere in the world you can go where there are no snakes in the grass, all right? The world wants what you got, folks. It does. What do you have? Do you have gold? Somebody will try to steal it from you. Do you have gold in somebody else's custody? Well, then the people who have it in your custody, do you trust them? They could steal it from you. Do you have cash in your house? Somebody could steal it from you, right? There's a reason why if you have all this wealth, you don't just pile it up out in the yard and leave it there, because it'll be gone by the next day, even if you have nice neighbors. The world wants what you got, folks, and that's universal. All right, so you have to be smart about it. Go ahead, Mish.
I was going to say, in the cryptocurrency area of the market, I think everyone wants to be like Bitcoin because that's what you always hear about, the blockchain. So if you're doing anything but Bitcoin, everyone else just wants to be Bitcoin. And I think the bottom line is, it's not in your custody. It's not yours. Because we learned on Celsius on the bail-in just yesterday that they're going to take $4 billion of people's money to pay off creditors.
Yeah, that's right. A federal judge just ruled. Yeah. Federal judge just ruled in the Celsius bankruptcy that people who held their assets on Celsius were unsecured creditors, that they had no claim to their own accounts any more than any of the other debtors that were owed money by Celsius. They were unsecured creditors. So do not wander aimlessly into crypto. Do your homework long before you buy anything. Do your research. Read about it. And don't just go for the easy one. If there's this guy who makes it easy for you to buy and own cryptocurrency, probably a reason. He's making money off of you somehow. All right? Nobody does anything for free. People have an angle. All right? So keep that in mind. Personally, the only thing I am buying right now ever is Bitcoin. I still average into Bitcoin. I still buy a little bit at a time. Right? That's a strategy I came up with well over a year ago, and I'm going to stick with it. I told myself I was going to ride out the next 2 crypto winners, and I was going to ride out the next 2 bull runs and just see where we land in 2 more cycles. And I'm going to keep doing that, even when times get hard, right? It's real easy to decide to do that when Bitcoin's 65,000. It's hard to do it when it's 16 and falling. And I think Bitcoin will fall further, but I think it will rebound and it will recover even harder. Now think about it, folks. Like Bitcoin, it's down. It's Wild West. You've got scam artists. You've got Changpeng Zhou. You've got Sam Bankman-Fried. Right? But what do you have in traditional finance? You've got Jamie Dimon. You've got Bernie Madoff. You've got Jerome Powell, Ben Bernanke, Janet Yellen. Are these people up to any good? If you ask me, they're even bigger crooks than these a-holes in crypto are. I mean, it's amateur hour in crypto compared to what the institutionalized crooks are doing to people. Right? They drove up the cost of living, and now they're trying to put everybody out of work. How is that any better than what Sam Bankman-Fried did in stealing from people? Either way, they're weaponizing misery against people. So, no, I don't think crypto is a scam. There's some people, we're going to have the comments probably in this video also, who say Bitcoin was a CIA Mossad operation. I don't buy into that. Sorry. I get it. It's the 2020s and no conspiracy theory is off limits. It's like daring it to be true. That particular one, I don't buy. And I think what the powers that be, what the elites of the world, the FEW backwards, Klaus and co., what they are trying to do will drive more and more people into Bitcoin. CBDCs will drive more and more people into Bitcoin. The Fed recession and what they do to the banking system and the most likely bail-ins that come out of that will drive people into Bitcoin. And I'm not saying they'll drive people to Binance. They won't drive people to Sam Bankman-Fried. They'll drive people to Bitcoin. Bitcoin is code. It's software. It's not a person. Bitcoin has no CEO or CFO. Bitcoin has no company. There's no central organization. It's just code. It's out and it's operating. It's trustless. And that's why what happened with CZ. Go ahead.
I bet you John Galt would have loved Bitcoin.
John Galt is Satoshi Nakamoto. They are one and the same. They are the same thing. They're both fictional characters representative of the exact same thing. And when they roll out the CBDCs and when they give us programmable money where they can control the means of consumption, it will drive more people into Bitcoin than ever before. And I plan on holding a lot of it when that happens.
I think people are confusing a little about the China digital currency thing that wasn't really adopted. They didn't force adoption yet, right? You can't really say something's really done until they decide if they're going to adopt or not, because a test run is a test run.
Yep. Yeah, I mean, they don't have to force adoption. They can just slowly limit the supply of cash, right? Cash gets lost, cash gets ripped, it ages. The bill, you ever see like a really old dollar bill, they fall apart. All they have to do is the mint would stop minting new bills and new coins, and eventually we'd all be on CBDCs. Right? So they wouldn't have to force it. They could just make it happen over time. So it'll be slow. And my guess is they'll roll it out because we beg them to. They'll create the problem and then offer up the solution. That's how these people operate. Anyways, thank you, Cormac. And, by the way, I like Bitcoin, guys. If you're not into Bitcoin, if you don't believe it, if you don't understand it, then don't. Just don't. Right? It doesn't have to be this. It brings out the worst in people sometimes, especially the Bitcoin gold bug argument, like this back and forth thing, like with Peter Schiff and Michael Saylor. Like, I think if you put Peter Schiff and Michael Saylor in the same room together, they would agree about 99.5% of everything. But man, do they go at it on this one topic. So focus on what you agree on.
Two more super chats came in.
All right. Thank you again, Cormac. I appreciate it, sir. Moving on. Where are we at? We're scrolling. Hey, Dumb Money Media. What's going on from the King of Money? I got another Sam and J-Pow video cooking right now, but you should check out that Kilo the Comex Breaker. I have not seen that one. I put it out the other day. I'm slightly getting faster at doing this, at some of this stuff.
Have you seen Dumb Money's version of SPF yet?
I'm trying to unsee it. I have seen Dumb Money Media's version of Sam Bankman-Fried. I double dog dare you to check that one out, everybody. I'm not going to encourage you to go check it out.
Because if you go to Discord, DMM or Dumb Money has his own channel. You can go in there and find it.
Okay. Or you can see it on his YouTube channel. But I'm just going to throw out the disclaimer. And thank you very much, Dumb Money Media, for the super chat. You cannot unsee that which is seen. That's all I'm going to tell you, folks. All right? I'm going to need a lot of therapy after watching Dumb Money Media's Sam Bankman-Fried video. Thank you, King of Money, sir. Keep up the good work. Appreciate it very much. And thank you, Dan Hedin. Says, do you see DOJ seized 465, I believe it's million, of SBF's money off Robinhood? So the story I saw going out today about that one is the DOJ has seized 465, correct me if I'm wrong here, Dan, $465 million of Robinhood shares because Sam Bankman-Fried borrowed money from Alameda to buy those shares. And now Sam is in court saying, I need that money to pay for my legal fees, and I legally borrowed that money from Alameda, so thanks. That's probably what he's saying. That was me doing my SBF impression. Thanks, I'll be here all week. Look, Sam Bankman-Fried bought Robinhood shares with borrowed money from Alameda, which Alameda illegally borrowed from FTX customers, commingled funds, stolen money. If you buy something with stolen money, it ain't yours, Sam. It's not how this works. So he's not going to get to keep his Robinhood shares. Robinhood is another one I would not touch. Not with my worst enemy's money. I would not be a Robinhood customer. I would not be a Robinhood shareholder. I would not borrow or lend money to or from Robinhood. They are two peas in a pod. By the way, all these guys keep getting used in the same sentence. Sam Bankman-Fried, Changpeng Zhou, Ken Griffin over at Citadel, Vlad over at Robinhood. It seems like they're all in the same little kofefi. We haven't heard kofefi in a while, have we? Not since the Orange Man left 1600 Pennsylvania. But they're all in the same little cabal, these guys. They're all intertwined. Who went bankrupt? Was it Silvergate? Was it Ken Griffin was a big investor in Silvergate in 2021? I think I found that one yesterday while I was DDing my Silvergate video. So Ken Griffin is investing in the bank that is lending all the money back and forth from FTX customers and to Binance and to Genesis and Gemini. It's this one. It's a club, and we ain't in it, guys. That's what it is. It's a club that we're not in. So don't play there. Don't play on their playground. Yeah, I did see that story, Dan. Thank you very much, sir, for the super chat, support of the channel. And it's 4:16. We've been going an hour. Let's take one last trip through the indexes, and then we're going to call it a day, guys, because it has been a while. The S&P closed up 85, exactly 2.25% for the day. Good day for the S&P. Likewise for the Dow, closing up 700, 2.13. Wrapping up a bumpy week for stocks, and the NASDAQ 264 points to the green side, or 2.5%. All three indexes gave back a little bit of the gains in the last few minutes of trading, but still big up day. Again, it was not a flight to safety. If you take out what happened in stocks, if you look at bond yields heading lower, especially on the long end of the curve, that looks like a flight to safety. If you look at commodities, people buying up gold and silver, that looks like a flight to safety. Of course, then you look at the stocks, that's not a flight to safety. That is not what this was. So today was not risk on. Today was not risk off. Today was dollar down. That was the story today. The Dixie, that big drop in the U.S. dollar, and the price of things is denominated in dollars. When the denominator gets smaller, the value goes higher. So that was the big story today. And again, that big technical breakdown in the U.S. dollar index that we see here on the yearly chart. This is only going back to about August. But we've got that death cross. We've got that rejection of the retest of that 105.08 level. So DXY is probably heading lower. We've still got central banks in Japan and China are dumping dollars to prop up their currencies. So it's not too surprising that the dollar's heading lower. And they could keep that up for about a year. They're dumping, the two countries combined are dumping at a rate of about $200 billion a month right now, and they started with about $2 trillion. So they can keep that up for a while, folks. So it probably looks like the DXY is heading lower. And if you zoom out, after that monster run the dollar had in 2022, the Dixie could go a whole heck of a lot lower. If I had to guess, I'd say we've got support right around 100. That psychological level of 100 on the DXY. So we will keep an eye on that one. All right, guys, I think we are going to call it a day. By the way, I did not say thank you to my Patreon supporters. Thank you guys for everything you do for the channel. I appreciate it very much. Had a good time talking with you guys on Wednesday. We get together on Zoom with the Patreon people once a week for a Q&A. So hopefully I will see you guys there. Link down below should you feel so inclined. Thank you to my Blue Wrenches and to Mish for keeping things neat in the chat. Mish has got his hand up. Go ahead, Mish. What do you got?
Hey, congratulations on hitting 33,000, man.
I hit 33,000?
Mm-hmm.
Did I hit 33,000 while we were talking?
We did.
Wow.
Wow.
That's amazing. All right, because I was stuck at 32.9, 32.8 for like 2 months. I said something that the algo did not like. I don't know what it was. Any given day, I'd probably say 100 things that offend the algorithm. Sometimes they smack me around a little. Sometimes they don't. But okay, we finally broke that 33,000 mark. Chris Taylor, financial prepper. I'm coming for you, Chris. I have broken through the shackles of 32.8, 32.9. Chris ran like another 3,000 or 4,000 ahead of me, and he's out there. He's out there in Vegas with Ninja right now. He's in Vegas with Ninja and Dan from allegedly. He's coming back with a few thousand subs, I bet. So don't worry, Chris.
I need to say M&J is the one that told me.
M&J said, all right. Thank you, M&J. Appreciate it very much. Thank you, everybody who subscribed to my channel. Welcome to my new guys. By the way, I meant to say something sooner. We're going to try something a little different next week with the morning show. Instead of doing a long live stream like this on Tuesday morning, what I'm going to try next week, I'm going to try to do a short live stream at the opening bell every morning next week. This is a test run. I'm just going to just going to check it out. And I know these long live streams, some guys see the 1 hour long timestamp and they don't watch. I understand. I don't like to see a 1 hour long timestamp when I'm scrolling through YouTube. So I'm going to try to break up the morning show that I do on Tuesday into several smaller ones. I'm going to try to do a 10-minute live stream every morning. I don't know if I'm going to be able to do it. It's just a temporary thing. We're going to try it out. First thing Monday morning at 9:30 at the opening bell. I'm going to try to do that every day next week. We'll see how it works. And we're just throwing stuff at the wall here. So look for that on Monday at 9:30. And I think we're going to call it there. Mitch, you got anything you want to add at the end?
Oh, man, cheers. Y'all have a great weekend. Everybody stay safe.
All right, everybody. Remember, hard times are coming, but they're not here yet. So have an awesome, awesome weekend. Enjoy this time with friends and family. And until next time, live small and dream big.